Hello, everyone. How's everyone doing? My name is Andrea Saavedra. Today's class it's going to be about the real estate magic formula, how to keep your transaction together from beginning to end. Today's agenda it's going to be a little bit about an introduction. I'm going to talk about the course overview. We're going to have a survey at the end of the presentation, so that way you tell us what you think about the class and if there's anything of value that you were able to grab from it, as well as if there are any other classes that you're interested in us providing to you guys. And last but not least, we're going to have questions and answers at the end of the presentation. A little bit about myself. Our introduction is that my name is Andrea Saavedra again. I was born in Mexico, Acapulco, Guerrero, and I have been living in Houston for the past 31 years. And out of the 31 years, I have been doing real estate for the last 20 years. I am a 2 times Icon agent with eXp Realty, and I mostly do residential real estate. When I'm not working in real estate, I'm a mom of 4 beautiful daughters. So today's course overview, so we go straight into it. It's going to be about the real estate magic formula. Okay, so I'm not sure that you can see my screen. I hope that you can. Let's see. And so the real estate magic formula, I'm just going to tell you a little bit about the story of this class. Majority of the classes that I teach is the stuff that I have been putting together for the past 20 years since I started doing real estate. And it's content that has been created to make it easy to learn and to make it easy to handle a transaction from beginning to end. There are a lot of classes out there about lead generation, but I think that in order for you to make it in real estate, there are a couple of parts to real estate. Number one, fish. Be able to fish, be able to get the lead, right? Be able to grab the people. And number two, once you have the fish in hand, then how do you cook the fish? So it's important, and I feel that that it's important that you know how to keep your transaction together. Once you have it, once you have a client, how can you best represent them? And that's by knowing and doing a lot of research prior to, even showing property sometimes. And so we're going to look at every single one of the steps in order for you to keep your transaction together from beginning to end, step by step. This training, it's going to be given in series because it's too much to give it all in 1 hour, guys. We have, and let me show you the magic formula. So this is my magic formula. Again, it was created by me and my staff, and we put it together. And the reason why we put it together is because we wanted to make sure that everybody was able to, print a form and be able to put it somewhere and close to you, or every time that you're handling a real estate transaction, and be able to be guided to do a property research, a competitor market analysis, a seller's net, buyer's closing cost and monthly payment, and a HUD statement, and give you the key to actually be able to put that together and provide it to your clients. So that's the reason why I called it formula, because if you do these 5 steps of the process, you're going to be a happy closer along with your clients. Okay, so we have the first thing that we do in a transaction. We are realtors, and we only handle transactions that obviously have either a legal description or a physical address. It's dirt. It's real estate. So for that, we're always going to need to do a property research. Because it's either land or it's a ranch, it's a house, it's a mobile home, anything. You have to do property research. Then once you do the property research, then we do a competitive market analysis. And it really doesn't matter if you're representing the buyer or the seller. We always do a competitive market analysis. And that's right after we do the property research. So first we need the PR, we call it. Now again, at the GABA team, in our team, we have abbreviations for all of this. Obviously, we all realtors use the CMA, but for the property research, we call it PR. So you're going to hear me say these abbreviations throughout the presentation. But again, property research, then we do the competitor market analysis. Once we do that, then we are sure to provide the buyer or seller the numbers that they want to know. So the seller's net is what we're going to tell the sellers that, how much money they're going to take once they close on the transaction after all fees and expenses. And the buyers want to know what their closing costs are going to be and their monthly payment. And once we do that, which will normally happen in step 1, 2, 3, and 4, I want to say the first 7 days of your transaction, once you get under contract. And then last but not least, we want to be able to explain the HUD statement to the client and make sure that we match our numbers and what we told the clients that they will either bring to closing or get at closing. And they have to match that HUD statement. And that's why we'll keep a formula together. We don't want to do a CMA and then it turns out that it's not, done correctly. We never told the seller how much money they were going to net at closing, and we get to the closing table, we get to, final step, and then they tell you, oh, it was, so much money in closing costs. Usually for a seller, it's about 8% of the sales price of the house. And you don't want them to tell you that they're not closing on the transaction because you didn't give them numbers. Usually, again, at the beginning of the transaction. Okay, so this is my magic formula. We're going to be sharing with you this form at the end of the presentation. But for now, let's take a look at every single one of these steps. Okay, so we start with the property research. Today's class, it's going to be, again, explaining the magic formula and what it contains, so you have an idea, a general idea as to how to handle it and put it together yourself. And then we are going to have time to explain to you the property research, and we're actually going to do a property research. Okay, so for now, let me show you the property research. What do we use? We have, and as realtors, we are supposed to use majority of our resources. If possible, the more resources we can use, the better, because we need to give a lot of information to our buyers and sellers, right? So when we do a property research, we use the realist tax record, the one that you see on the screen right now. We check availability directly with the listing agent to make sure that the property is available up until the moment that we're showing the house. So we will be texting, we will be calling the listing agent and figuring out if they have any offers, etc. So it's part of our property research, because we want to let our buyers know whether the property is available or not, right? If you're going to go show properties today, you have to make sure that the property is available, because if your clients like that property today, you can put in an offer on it. You're able to put in an offer and win that offer. Then we're going to check if the property is or not in a flood zone, because we want to make sure that they know this ahead of time. We don't want them to find out in the middle of the transaction that the property is in a flood zone, and now their closing costs are increasing. If we're tight with the ratios, they're not qualifying any longer, because now they have an additional monthly payment. So we want to be able to find this information prior to, again, even showing the property, because you don't want to go show a property. They want you to put in an offer, and then you come back and do the research, and oops, the property is in a flood zone. Okay, then we also want to get the appraisal district tax records to see how much money this property is paying on taxes. Okay, again, you can possibly get this information from realist tax records, but we want to get the actual numbers. So that's why we use the appraisal district tax records. We also, obviously, if I'm listing the property and it's not on the MLS, well, this doesn't necessarily count. But if it's on the MLS or I'm representing a buyer, I'm going to go to the MLS and get some information before I put in an offer. And I'm also going to check the property archive of the property archive, which is for the property. Then I'm also going to check seller's disclosure notice to make sure that I have no surprises when I'm trying to put in an offer. And if I'm doing a CMA for a seller on a property that I have never seen, just to get an idea as to how much the properties are selling in their area by asking them questions, of course, then I'm also going to check out Google Maps, because I need to know what my property looks like. Okay, so that's what the property research it entails. It's everything put together, and we do it. It's going to be done in a matter of minutes. It sounds like it's a lot, and yes, you need to get a lot of information for your clients, so they trust you. Okay, the next step in the magic formula, it's going to be the CMA. How do you do your CMAs? Today I went to an appraisal appointment, The way that I was able to do my CMAs very accurate, or as accurate as possible, it's because on every single listing I try to go. This is to me like money, like dollars, right? I try to go to the appraisal appointment, and I try to have a conversation with the appraiser. And if I have any questions about, the problems that I have when I'm pricing the property, I will ask them to the appraiser. Believe it or not, I usually create a really good relationship with them, and they will tell me, they will give me some information. Now, when you go today, the appraiser basically told us, I went with one of my team members, and he told us that they don't necessarily like to see us there. You can tell that when we were having a conversation with the appraiser, he was like, your comps, oh, okay. He says that when we price a property and we price per square footage, that they literally throw away our comparables. I mean, you learn so much from the conversations that you can have with this appraiser, and you will learn the matrix that they use in order to come up with the price of a house, or the value of. They come up with the value of a house. We come up with the price of the house. So the competitor market analysis is a key component of the magic formula. We do it again on our buyers and our sellers. So what do we check in a CMA? As a formula, if you are doing a CMA, please check these items right here and start working on them. It's if the property is local, it's in Houston, let's say, I'm going to go 0 to 3 miles. Remember, we go like this. We go checking the properties that are closest to our properties that compare to our property, to the subject property. So I look at the closest properties, 0 to 3 miles, and I'm giving you the parameters because this is what they give us, what the appraisers have given me. If it's a rural property, if the property is in rural, then it's going to be 0 to 10 miles. I used to think it was up to 5 miles, but lately I had an appraiser telling me that they usually go up to 10 miles if needed. Then we want to make sure that we stay hopefully in the same subdivision. Next, we're going to take a look at the properties that have sold in the last 6 to 12 months. Okay. And if you are doing a CMA for a seller, for a listing, I usually look at the 3 to 4 months, because if I'm going to have the property listed for probably a month before I can sell it, or someone can put in an offer, not this market though, but regular market, then if I'm going to have the property on the market for 1 to 2 months, I want to make sure that these comparables can still be used by the appraiser. Okay, so that's the reason why with sellers we do 3 to 4 months. Then we do a 15 to 20% plus and less square footage. And what I'm meaning is the range between the square footage. For instance, we have 2,000 square feet, and if we have 2,000 square feet, I always have my calculator here with me. Okay, so the 15% of that, it's going to be 300. So I'm going to do the range between 1,700 and 2,300. Okay, so it's the 15% difference between your square footage of the house. Then you also want to know the condition of the property, so you can compare apple to apples. And that's going to, what do you need for that? You need to see the pictures of the property. You need to see the disclosures and read them. You will, sometimes you have to take a look, not sometimes, I always take a look at the remarks, agent remarks, and therefore you can grab a lot of information from there, from the MLS, if you're doing a CMA for a buyer. And then also you want to choose the properties that have been built in the last in a range of 5 to 10 years. So let's say that the property was built in 1995. I'm first going to look at houses between 1990 and 2000. Okay, because it's like 5-year difference, but I can continue to go up if I need to. Another thing that affects the values of the property, it's the flood zone. The properties that have flooded usually sell for a little bit less, and that affects the value. So I check, did this property flood? And maybe that's, these 3 properties didn't flood, but this one did flood. Maybe that's the reason why this one sold for less money than these 3 properties. Okay. Then I also want to take a look at the financial type and terms. Why? Because properties that sold, for instance, cash, If they sold for cash, they usually sell for less money. Not this market though, not this market, but regularly they sell for less money. If it's a for sale by owner, they're usually overpriced. Why? Because the FISBOs, they bump up the value of the property or the price of the property, and they sell them for like 10 or 15% higher than the asking price. So those properties I don't want to compare, especially when I'm representing a buyer, because it might not appraise, because the FISBOs are treated differently. Sometimes it can be 10 to 15% more than what the actual market value of the properties in the area is. But sometimes it's a lot more. I mean, I've seen 30%. So it can be crazy. So, but you want to know how this property closed. Now, I already know what you're going to say, that the MLS, it's not giving you that information any longer. Pick up the phone and get that information. I like to get it. And you know why I do it? Because I have appraisers calling me, asking me this question. So I already know that they're doing it. If they do it, why can't we do it? And then I also want to check if my property is in an adverse location. If it's in an adverse location, for instance, let's say that there's commercial. I had people tell me, oh, I like this house because it's right in front of the elementary school. And it's very convenient and nice for them, but it doesn't necessarily mean that the property gets more value because it has commercial in front of it. Okay, so those are things that you have to look at when you do a competitor market analysis. Now, again, with this formula, you can just check, okay, so first I'm going to look at the closest properties. And if I'm local, it's going to be between 0 and 3 miles. That means I go from 0.25 miles to 0.5 miles to 1 mile, etc. before I get to 3. I don't go to 3 straight up, right? First, I need to find out if there are comparables in the area. Then if I have to extend, first I start with 0.25. And if I have to extend to half a mile, then I make sure that I type in the subdivision name, the name of the subdivision. Why? Because I want to make sure that I stay in the neighborhood. And then I put in there in the last 6 months. This market and the crazy it is, I would do 3 months, Okay, anything that have sold in the last 3 months. If not, then I go 6 months. And worst comes to worst, especially now, I try not to, but worst comes to worst, you can possibly go 12 months. Because remember, a year ago, you know what? It started in March. So in March, that's when you can go 12 months, because that's when all the craziness of real estate and values of the properties went up drastically. Okay, so then obviously the square footage and the condition and all that stuff on the CMA. So this is your formula. You have take a screenshot of this. We will send you, if you give us your email address at the end of the presentation, we will send you the form so you can have it, so you can print it, put it somewhere close to you, and then say, hey, I have it. So all I have to do is follow these steps in order to come up with a good value for a good price, sales price for the property, or a good offer amount, right? Because if you are representing the buyer, I hope that you're doing your CMAs. It's going to help you so much, especially now in this market and multiple offer situations. Okay. Then there's only 2 things that the buyers want to know. Number 1, how much money I'm bringing to the table. Number 2, what's my monthly payment? That's it, guys. Why do we continue to think and try to give them other information that they're not asking for? I want to know how much money I'm bringing to the table, and I want to know what's my monthly payment. We in our office, in our team, we all learned how to calculate the monthly payment. I mean, I'm a loan officer, but the rest of my people is not, and they know how to calculate a monthly payment. Why are you relying on the lender to give you that information if you're showing houses on the weekend and they won't respond to you? So learn how to calculate the monthly payment. Spend half a day with your lender. Invite them to lunch. Tell them, show me how I can calculate the monthly payment, because I want to make sure that I give this information to my buyers prior to even showing them houses. So what I do is I have a chart and I show properties to my buyers, and I tell them, okay, for this property, the monthly payment is this amount. For this property, the monthly payment is this amount. Oh, this is too high. I don't even want to see it. Perfect. Let's take this property off. Okay. So again, buyers want to know 2 things only. What's my monthly payment going to be, and my closing cost? Why don't you learn how to do it? Learn and make sure that your lender is giving that information to your buyers if you don't want to have surprises. Okay, so with this buyer closing cost, again, we're going to be giving these classes in series, and we're going to teach you how to do this. And I created my own form. As you can see, we are creators here at the GABA team. I don't take from anyone. I don't rely on applications, etc. I mean, I do get a lot of information, but I create my own forms, and I have approximation of buyer closing cost, and it can be very, very close. Usually my buyer's closing cost and my seller's net, it's within $200 difference. Imagine. But what are we looking for? We want to make sure that we know what are the lender closing costs, what are the title company fees, what are the real estate fees, inspections. If they're gonna, for real estate, I have a couple. I have a transaction fee that we charge, and I have inspections, maybe the money that they're going to be spending on inspections. The buyers want to know overall how much money I'm going to spend, and you have to be able to respond this information to them. What are the prepaid items and the reserves, and what are the negotiated and finance credits that they're getting based on what you negotiated on the contract. So given the buyer's closing cost and the monthly payment, and understanding every single one of those costs is important, so you can give this information to your buyers. Then we have the seller's net. And the seller's net I love. And I have had sellers thinking that they were netting everything. If they're selling the property for 300, they think that they're going to net 300. And I'm like, no. I like to keep things up front. So when I do my competitor market analysis, I make sure that I have a seller's net. Again, please be sure that your seller's net is as close as what the actual numbers will be at the end of the transaction. Obviously, when I give them the seller's net, it's based on my CMA. And based on my CMA, I believe that we're going to sell the house for this much, and this is how much money you will net. If we sell it for $5,000 more, then you get $5,000 more. If we sell it for $5,000 less, you will get $5,000 less. But this figure has to match that HUD statement as close as possible. And when I say this, my numbers are within $200. My sellers will never get to the closing with surprises, thinking that they're going to get a certain amount, and they don't get that. And for that, we want to make sure that we put everything that they're going to be paying. They're going to be paying, number one, commission. They're going to be paying the buyer's commission. They're going to be paying my commission. I separate it on my seller's net. And the reason why I do that is because I don't want them to think that I'm getting the 6% of the commission they're paying. So I have the commission, I have the escrow fees, because they're going to they have their own closing costs. We know that, right? They're probably going to pay for the title policy. I always tell them how important it is for them to pay a home warranty. They might pay repairs, or if the property needs repairs, that's something that we're going to have to deduct at the end of the transaction, or they're going to have to pay maybe upfront, maybe at closing. We will see. They have a mortgage. We need to obtain a payoff balance, so that way we tell them exactly, okay, after all the cost and the amount of paying your mortgage balance, this is exactly how much money you're going to net. Okay. Then we need to know, what are they paying in property taxes? Remember, they pay taxes from the beginning of the year if they didn't owe any taxes last year or previous years, right? They say that they're clean all the way up until the beginning of the year, and taxes are paid in arrears. So how much money are you going to pay from the beginning of the year up until the day of closing? So I have to be able to calculate that very well in order for my numbers to match. Okay, so I get the property taxes. If there are any homeowners association fees, for instance, if they pay the statement of account, I make sure that I tell them this upfront. And if they have any lien payoffs. Now, guys, we're getting all the surprises with the liens that the property might have. Some might just be mechanic liens, some might be the mortgage lien, but some of them, some crazy stuff I've seen, and you are going to start seeing this more often, are the water softeners and the solar panels. Okay. Not only that, guys, I mean, I had Windows liens, and I had AC invoices that they owe, and then we want to make sure that they pay them off when they close on the property, so the buyers don't come back in the future and let you know that, oh, they owe this amount and now they're charging me because it's through the house or something, or it was placed on the house. They came and knocked on the door and they say that, oh, the seller didn't pay for the windows, so now I have to pay for them as a new buyer. So you want to make sure that you ask all of these questions when you do your listing presentation with your sellers, but all of these fees are fees that you have to have in consideration. Now, as you can see so far, it's only been 25 minutes on our presentation and you feel already overwhelmed, right? It feels like it's too much. And we all feel that way. And you can forget, right? And that's the reason why I have my seller's estimated net. Now, I have my own form, the one that you can see on the screen, but you can also get this form from SIP forms. It's there. There's a buyer closing cost and there's a seller's net. Just learn how to use it. And if you're not taking any more of our classes, but we hope you do, learn how to use it and make sure that your numbers match, that you understand every single one of the fees in there. So that way, when the seller asks you something, you know how to respond. Okay, so make sure that we do a seller's net in our magic formula. And last but not least, once we did a buyer's closing cost and or worksheet that or initial closing disclosure, I think they call it, that the lender did, and they know how much their monthly payment is going to be, we want to make sure that there are no surprises in between. We get to the closing disclosure. It has to match the numbers or hopefully be better. If we did a seller's net, it has to match the numbers or be better, hopefully. Hopefully, again, I always tell the sellers my numbers are always going to be between $200 less or $200 more. They tell me, and they will tell me and ask me several times. And they'll say, hey, but it could be more only if we get a higher offer. But if we get the same offer as the numbers I'm giving you here, this is exactly how much money you're going to net. It's not too far from reality. But you have to feel confident about that. And how do you feel confident? When you know your numbers, you know how to put this together and have those calculations in a spreadsheet. All right, so that's the magic formula. Again, this is the form that I use. Every single one of them, it has all the fees that you need to look at in order to get to your seller's net, to your property, do your property research, do your CMA, seller's net, buyer's closing cost and monthly payment, and how to explain your HUD closing statement. What are you looking at on the closing statement? We're looking at contract, we're looking at amendments, we're looking at the tax and appraisal certificate, we're looking at the HOA certificate to make sure that they're charging us the right amount and that the prepaids are in there as well. Are there any unpaid invoices that happen throughout the transaction? For instance, what if the seller did repairs and they're going to have to pay that at closing? Take a look at this formula, because this is going to tell you everything that you have to know. Oh, it's a quick reminder. Again, as you can see, it's a lot. It's not simple. Real estate is not simple. It's a lot to learn and it's a lot to take in, but that's the reason why we did this. This is, again, my magic formula. Okay, so let's move on to the next presentation. As I mentioned today, we're going to do the property research. So let me go back to this. And let's go to the property research. Okay, so I'm gonna give you a little bit of information and the reason why we need to do property research. And let's take a look at this presentation. Research is creating new knowledge. You have to do research, especially on the property that you are probably selling or helping your buyer purchase. Again, research is creating new knowledge. If people like you, they'll listen to you. But if they trust you, they'll do business with you. As you can see, Zig Ziglar is one of my favorites. And you want to make sure that they trust you. And with knowledge, they will. Trust me. I always think, and the way I look at property research is choosing the right property guarantees your way into the closing table. Don't try to go too fast. Learn your job. Don't ever talk until you know what you're talking about. So when you are doing an open house, do you print a PR, a property research? Do you know anything about the property? What's the square footage? Is it in a flat zone? I mean, all this, the research that you hopefully you did before you went to go show the property. The other day I went to an open house and I have this lady and she's there and she's all nice. Hi. The buyers walked in and they're asking, Do you know if this property is in a flood zone? And she's like, oh, good question. I'm not 100% sure. I think it's on the seller's disclosure. How is the buyer going to get the seller disclosure? Number one. Number two, isn't that information that you have done a research on the property and be able to give this information to the buyers? Do they see you as a knowledgeable person or just someone that knows how to smile? So choosing the right property guarantees your way into the closing table. Again, you have to know what you're talking about, especially with buyers and sellers. And by doing the research is how you're going to be able to, to get this information out. Again, it's important that when you do your property research, you know and have in mind the key points. What do buyers want? They want a good deal. Okay, so how do we do that? Doing a property a comparative market analysis. They want the lowest monthly payment and closing cost. They want to love and like the house that they're going to buy. They want to avoid local issues, which is flood areas, maybe. So listen to your clients. I'm hoping that you are having a full conversation with your buyers and you're asking them which area you want to buy. Is it okay if the property has a garage or not? Are you okay with the flood zone or not? Or you just want a property that even if it's in a flood zone, it doesn't flood or it never flooded before. What are the needs of your buyers? You need to sit down with them, you need to listen to them, and then make sure that you're able to provide this information to them. They want the best location, they want the best schools. Can they afford it? We don't know, but that's what they want, and you need to know this ahead of time. They want to make sure that they get into a house, especially if they're getting a loan on it, that it's not going to need any repairs, or that they're gonna, they're trying to avoid hassles. And last but not least, especially with our Hispanic market, they want to make sure that the title is under their name. So if you have to tell it 2 or 3 times, fine. We already know that, yes, we're closing in the title company, but this is what we know. We don't assume that the buyer knows this information. So you want to make sure that when you're having a buyer presentation with them, you give them this information so they know, and you can differentiate yourself from other realtors. So what do sellers want? Okay, so they want to make sure, mainly anything. I literally have a buyer, and she told me, do you have time to submit my love letter? And I'm like, I'm a listing agent, and the seller will probably read your letter. Yes, they will. They will like it. They'll say, oh, that's a nice family, and it's a beautiful dog. But the numbers are it. Whatever amount they're going to net is more important to them than selling the house for a love letter. This is my experience. Your experience might be different, fine. But they want maximum return. Majority of the sellers, that's what they're looking for. They want to sell their home for the max amount of money, top dollar. They want to know how much money they're going to net at closing. And if they don't want to know this information, you want to give it to them because you don't want surprises at closing. They don't want to do repairs, preferably, and this is perfect market for them. They want to sell it fast, especially if they are moving out of the property prior to, closing on it. And they want a transaction that has no hassles, and they don't want any liability. Now, the last part, they don't always understand that there's a lot of liability on the forms that they have to provide on the forms. And that's the reason why they use you as the realtor, because they expect that what forms they need to sign and how they need to fill them out and all that stuff. So they are protected. And sometimes they don't know that it's like, there's a lot of liability for sellers, but we want to make sure that we remind them, okay? But that's what they want usually. So we want to give them what they want. You listen to your client. They want to know how much money they're bringing to the table, fine. Let me give it to you. You want to know how much is the monthly payment? Let me give it to you. You want to know how much you're netting on your house once we closed and everything after all fees, commission, this and that? Here you go. Give them what they want. This is what they want. Tell me different on the comments if they want something else or if they don't necessarily care about these items. But based on 20 years of experience, this is what they want. So if you concentrate on your principal's benefits, yours will follow right behind. See Ziegler again. You can have everything in life you want if you will just help other people get what they want. So we want to give them what they want. We want to give them the information that they're looking for. And you are the professional that's representing them. So you are getting this information to them. What are the things that will affect the sellers? And that's the reason why we want to know these things up front. If the property is in a flood zone, have you ever had, again, let me ask you this, guys, have you ever had a seller that didn't know that their property is in a flood zone? You'd be surprised. I mean, and they're stuck to their mind that the property is not in a flood zone. So I literally have to bring proof your property is on a flood zone. I suggest that we get an elevation certificate, so we figure out how elevated is the house and how much are the buyers going to pay in flood insurance. Why? Because the buyers will want to know if this is something that they can do. That if they're tight on the ratios, it probably won't work for them. And why would I want to get into a transaction, pending transaction, to find out in the middle of the transaction that the insurance for flood is $4,000 when I knew ahead of time? So again, flood zone for the seller, it's equal to timing. If I find out later in the transaction that they are in a flood zone, it's going to take this transaction to possibly not close with this buyer and go on to the next buyer. Oh, okay, I learned through experience. No, you learn them right here today. Okay. Repairs, they're going to cost timing and they're going to affect the seller's net. Okay, if they have to do repairs, we're going to let them know based on experience. Bring in a contractor. This is what's going to cost to do these repairs that a buyer will normally ask for. Okay, so that, because it's going to affect the numbers. The appraisal. When you do a CMA, it's not an appraisal. You're not valuing a property. You're just finding out what could possibly be the price of a house. However, it's going to, if they do an appraisal and the property don't meet value and you didn't know, it's going to affect the seller's net. And if the seller is looking to net a certain amount of money and you don't necessarily know that the property could possibly not appraise, then hey, does that really, is it possible that the seller won't close on this property? What if they're buying another property and they put in an offer for exactly the amount that they're netting? Now they can buy another property. If they can buy another property, they can terminate your transaction because you didn't do a CMA, a correct one, and the property didn't appraise. Okay, so they might not sell. If there are any title issues, it's going to affect them with time, because if we don't, I get the listing, let's open up title. Let's open up title and figure out if there's anything that I need to work on while I have the property for sale, and if there's anything I need to work on, I will do it while I have the property listed. Now, this market, it will get under contract right away, but still, the sooner you start opening title on the property on your listing, the better. Disclosures, if they don't provide this is based on property code. If they don't provide the correct disclosures to the buyers, they get in trouble. But I had a buyer, and we were in a transaction in which he had to sue the seller because the seller decided not to sell the property after all. They did everything wrong, thankfully. We did everything mostly okay. We sent all the documents to the attorney because he did use an attorney. When the attorney came back to me, he didn't discriminate, guys. He said, I'm suing title company, I'm suing seller agent, I'm sorry, because this was a listing agent, and I'm suing the seller. And I'm like, wait, I don't think that the listing agent, it was the listing agent's fault or the title company. They don't discriminate, so if there are forms that the seller didn't provide or they provided them incorrectly, it's on us. And I want you to know how important it is that you start learning every single one of your forms and know what your people is getting into. Okay, so the disclosures can cause hassles for sure. Now, mortgage payoff, that's going to affect the seller's net. The other day I had a closing in which the seller told me, and I actually looked at the statement, the mortgage statement, and it said that they owed $86,000, I think. Well, we get the payoff, and that's something that you want to get immediately after you list the property. Send the payoff. You get the form, you have the mortgage payoff authorization, so send it out and get your payoff balance. The payoff balance is $23,000 more. The seller I spent 2 hours with them on the phone. I'm closing the transaction, okay? But again, this is something that we do, and you want to keep your transaction together. Hey, you show me a statement, and the statement says that you owe 87,000, and now look at this. Look at this payoff balance is coming up with 23 to 24. I don't remember more that you have to pay. Now let's give them the benefit of the doubt. I said, let's call your lender and let's figure out why they're charging you this 20K extra. Turns out that they did have the lender advance payments for them on their taxes and insurance and stuff like that. They did owe the money. However, it was good to fix it and be able to figure out prior to closing. You get to closing, they might say, I won't close on this transaction. Okay, so not all transactions are easy, but if you do these things ahead of time, you'll be able to close your transaction and have a happy closing. So the HOA, it's going to affect the seller's net. What if the HOA has violations, or they have previous fees that they never paid, or any fees that they owe right now? The statement of account, what is the cost for it? Is there a capital fee? Anything that could possibly affect their net, I want to be able to get. So these are the things that actually affect the sellers. Now, what are the things that affect the buyers? Let me go back here. The things that affect the buyers are taxes. So the taxes affect the monthly payment because it's a component of the monthly payment. The hazard insurance, how high is it? It affects the monthly payment and the closing cost. Remember, we have to pay 1 year ahead of time, and it affects the monthly payment. The flood insurance, they're going to need additional closing cost, and they're going to need they're going to have a higher monthly payment because now it has to be accounted with the monthly payment. If the property is in the mud district, they're going to be paying more taxes, so that's going to possibly affect their monthly payment. If the property needs repairs, that's going to affect timing and the mortgage, because if the property needs a lot of repairs, then the lender can say, I won't finance this property. Again, if the property has multiple offers, which is what's happening right now, that's going to affect their love, because if you have multiple offers, you're not able to get the offers, then they start not trusting you any longer. So we want to make sure that we give them again, you sit down with your buyers, let them know how the market is and what we're going to do different than other realtors in order to help them. And that's as much as you can do, right? But that affects, multiple offers. It's going to affect the monthly payment and the closing cost, because at this point, they might have to bring more money to the table, especially now, this market. So it's something that you need to let them know. And the appraisal affects, the love they have for the house and the closing cost. So what are the things that affect the buyer? You have to keep those in your mind. So preliminary property research is something that we want to do always, even before showing the property. It's not going to take long, and we're going to get it done. So Albert Einstein said, everything should be made as simple as possible, but not simpler, guys. Again, as simple as possible, as fast as possible, as effective as possible, but not simpler. Because if you do, then you're compromising your transaction, and you don't want to do that. You want to make sure that you do a lot of this work preliminarily. That way you can get to the closing table and don't worry about not getting there, right? Except the things that are not, that you don't necessarily handle. Okay, guys, so now let's open it up and let's see if you guys can please give me an address. And let's do a property research. Okay, so if anyone can give me an address, let's do a property research. Let's do it right now. And you see how it's not going to take a long time, and we're going to be able to get a lot of information. Okay, so I have 6234 Presidio Canyon. So let's do that. 6234. So the first step, remember we talk about PR and everything that we need. So I need the realist, I need the MLS. So I'm going to show you how I do my property research. All right. 6234 Presidio. and see, 544. So let's figure out how long it's going to take you. It's not going to take you much. Okay. So I can see that the property was sold so many times. As you can see, 120, 126, 163, and it had some expires in there and some termination listings. But the last sale happened, and obviously the way I can tell is the last sale. It's because of the price. It sold for 365. So let's take a look at this one. And let me go down and make sure that the property sold. This is when it sold last, right? So on this property research, yeah, it sold October 19, 2021. So I can see a lot of information right here. Remember, I told you I wanted to do and let's pretend that I'm going to go meet the sellers. Okay, I'm doing the property research for the sellers. So they tell me, okay, Andrea, I sold this property. I purchased this property a long time ago. Okay, let me take a look at it. So it looks like it was for sale for 350. Looks like they bought it for 365. They bought it recently, so that gives me a red flag. Why do they want to sell so soon? They have an FHA loan on it based on this, but I'm also going to continue to get more information. I want to see the property. I probably need to do a CMA, and I don't know anything about this property. Okay, so let me take a look at it and let me see what I'm going to be selling, hopefully, because I'm getting this listing. So they recently purchased this, so probably not major upgrades. I can see the kitchen. I can see the cabinets. Nice light fixtures, carpet. So first I get to know my property, right? And second, I'm going to pull the property research, okay? Which you do a lot of this information. And I have to share the screen. I have to share the screen? Oh, okay. Sorry, guys, I have to share the screen, and I wasn't sharing the screen. So let's see. There we go. All right. Sorry, I was not sharing the screen. Okay, so first I went and got I put the address on my metrics dashboard. And once I put the address in there, this pulled up, and I can see again that the property was sold in October 19, 2021. 365 is the sale price. So I'm checking all of this, and I'm pulling the property research. Okay. So again, this is a PR for a listing. So right here, where it says tax account, I'm going to click, and I'm going to pull my PR, my property research. I like not this view, but I'm going to go to Launch Realist because I like this view better. It's, for me, I'm a visual learner, so I can see the information, I can understand it better. And then here goes my PR. I like it as well because if you can see at the bottom of the property detail, property research, I can see the lot dimensions of the property. So I see it's a 62 feet by 117. And I like that. This is not necessarily a survey, but some buyers will ask you, can you please tell me what are the dimensions of the lot? So I tell them this is not necessarily 100% accurate. You still have to do a survey, but it will give you a really good idea as to what the dimensions of the lot are. Okay, so that's the reason why I like this property research. So let me pull this and let me print it, or let me download it. Okay. This is a CMA I was doing earlier. Okay. This is another PR. All right. So here we go. So I have an Apple computer, and the reason why I got Apple, it's because I can highlight and I can write on my PDFs, and it's so easy, and I use this a lot. So I am writing here, and I'm going to highlight the most important items here. So I have my address, I have the square footage of the property. This is the MLS square footage only. I have the year built of the property. I have the last MLS sale. I'm going to have the owner's name. When you're submitting an offer, that's where you're getting it from, right? At the bottom, I'm going to go right here. I get the legal description of the property. It's right here because I want to be sure that that legal description is on my contract correctly, so no one gets in trouble, right? You're not missing a section number. You're not missing anything. This is very important on your contract. This property, I can tell already that it's mud. It has a mud district. I like to look at the value of the property, and also I like to look, and I usually just pick the highest number. See how fast we're doing this? And I want to take a look at the taxes and the year. And I want to make sure that I'm 2022 right now. It's the previous year. Sometimes it's going to have other years. You don't want that information on the MLS. I don't necessarily trust the MLS much because it doesn't have all the accurate information, especially if the listing agent had to put it in there. Not saying that the listing agents are bad, but where they're getting their information from, it's a lot of the times not 100% accurate. So I rather trust my PR, my property research. Then I'm going to go down to jurisdiction. And if you go to jurisdiction, it will let you right there if there's a mud district. It's a single mud number 8. Okay. So I have that in there. Then I continue to go down. And then I go to last market sale and sales history. I'm listing this property. Did Mr. Kalanick call me to ask me to sell this property, or was it someone else? Okay, so who bought the property last, and when did he buy it? When did he get title to the property? Now, if you're representing a buyer, you want to know this information because if your buyer has FHA financing, you already know that he cannot purchase a property if the seller has been an owner of the property for the last 3 months, right? So this is good to do your research. I do it to know if it's a buyer. I want to know if he has FHA, that I'm going to be able to, to take this one FHA, and that we're going to be able to close. Then I go down, and again, I'm seeing this. So I like to write down a lot of information. Let me go back to the MLS right here. And the first thing on my property research that I need to find out, it's the flood map. Okay, so I'm going to figure out if this property is in a flood zone. I go to flood map. Now it's very easy. Before, guys, it was like a lot of hassle. People didn't know how to check if the property was in a flood zone. Now it's so easy that if you're not checking this before even you show properties, it's not good. But I hope you're doing this. Okay, so I can tell right here that the property is in 500X. So it's in the 500-year flood zone. Then we have a 100-year flood zone, which is the AE, the purple that you see there. And we have dry, which is the orange that we see at the bottom, zone X. So I can see that it's in a 500 flood year. So I'm going to go back to my property research. And I actually type in not in a flood zone, NIF. Z. NIFs for us, again, at the Geva team, we use a lot of abbreviations. So that means it's not in a flood zone, okay? Then I need to know when I'm working the listing agreement, I need to know all the disclosures that I need, right? And this document will give you all the answers. The only thing that we won't be able to check right here, it's the homeowners association. Everything else, I need to know what we're going to be asking from the seller in order to put the whole listing agreement together. So right here, I'm going to do lead-based paint addendum, abbreviations. And I'm going to just say no, because the house was built in 1999, and the houses that were built in 1978 and below, those are the ones that are going to need a lead-based paint addendum. Then, so I put in here no lead-based paint addendum. I work with a few properties throughout the week and the days, and therefore I want to make sure that I save this information and I have it for my sellers and I have it in my file, so that way I know exactly what we need and what are the disclosures that we're going to need when we write up the listing agreement. Again, this property is in the mud district. We figured that out, so I'm going to do mud equals yes, and I'm going to go down. Is the seller? I already, Mr. Kalaki is the one that called me. So yeah, he's the seller, but he just purchased the property in 2021. So I'm probably going to have questions now. Did he get a mortgage? Because if he did get a mortgage, which I can see here, see mortgage history, he did get a mortgage and he got it through Homebridge Financial Services. So I'm going to know that much. I know already that it's an FHA loan. See, this is letting you know. Okay, this is pulling from the title records insurance, the title records, I'm sorry, and it's right here. So yeah, they do have an FHA loan, and they owe $358. So red flag, they just purchased the property. I need to do a CMA quick because I might, or just figure out how much the property is worth, because what if the property, the money is not there to cover for the closing cost and my commission? So doing the property research is going to help you so much. Okay. And I can also see on properties the title chain. Sometimes people tell me, how do you know this? It's all in your property research. Just, pull it, read it, learn it, and use it. Okay. So from I can tell from 2000, they bought the property, Thomas Glass bought the property from Polte. Then Brooke Matthews sold the property to Ginepro. So I can see a break in the title right there, because what should be right here, it's the Thomas Glass, right? So then I will be asking, what happened here? There's a break in the title. I'll check and ask the seller that. But at the end of the day, I care about this, but this will give me an idea as to whether there's a break in the title, and that's a red flag for me. If it's a red flag, I will put it in here. I will type it and say red flag. Make sure that you check this with the title company and ask the sellers as well. And then they do have a mortgage and they owe this amount. Perfect. So the only thing that I cannot, and so if they had a mortgage recently and I'm listing this property, what does that tell me? That I'm going to need my mortgage disclosure. And I'm also probably, do they have a survey? More than likely, they will have a survey. Why? Because the lender should have requested one and they recently closed on the property. So do they have a survey? I will just do question mark because I will ask them this information. Okay. I will save this as my PR or 6234 deciding. And that's my PR right there. Now, I'm going to show you something else. I said that we need more, right? So I'm going to take a look at I took a look at the properties. I'm also going to take a look at the property archives. And what do I want to know there? If they sold it, when did they buy it, how many times they sold the property, how long it was on the market, all that information. And if there are any attachments and I'm listing this property, listen, look at this. If I'm listing this property, boom, another realtor did my job already. So I already know how to fill out the forms because they're in there. So I can already tell that there's a T47 that was filled out. I'm going to need my own because I'm listing this property, but there's a MUD disclosure, which is awesome. And there's a seller's disclosure, which is going to give me a lot of information about this property. If I have any questions, I will go ahead and ask them, right? Anything, for instance, I can see this. See, the property is not 500 flat year. And I did that incorrectly on the PR, guys. I'm sorry. It's a 500 flat year. So I just do 500 year flat zone, okay? So when it is in a 500 year flat zone, it don't necessarily flood. But this property flooded based on the seller's disclosure. And I already know this information when I'm going to go talk to the seller, right? Because I saw it on a previous seller's disclosure. So you want to be able to research and know all of this information. So when you get to them, it's going to be questions related to this, related to what you already know, and then they're going to start giving you answers. But you will sound as you will look as a professional, not someone that is just trying to get the information from them and don't know much about the property. I will do my property research. Okay, so I checked all that up, and let's pretend that I don't know. Let's say that I didn't see the pictures. Okay, I'm gonna go real quick to Google Maps, and I'm gonna enter the information in there for this property. So my PR 6234 Cider Canyon, right here. I want to know, it's not giving me the information, so I probably have to do layers and see my properties right here. Okay, so I don't see the street, but I can see the earth view of this. And that's what's on your formula, on your magic formula. I put in there either street or earth view. Why? What am I looking for? Is my property in an adverse location? Where is it located? Is there a school? Is there a business behind it? Are there some apartments in there? So I want to know. So no, I have a good property. Look, it's close to a cul-de-sac, and there's a neighbor behind it. So, and there's a regular street in front of it. I love it. I love it. So, but if I go to do a listing appointment, and let's say that there's commercial in front or back of the property, that's when I'm going to be able to find out that, I mean, I will tell the seller, it's going to affect my CMA, and the property, the appraiser is going to make an adjustment on being a commercial street. So I want to know those things ahead of time. So that's it, guys. As you can see, it was very simple to do a property research. Now, let's say that you do have an assistant and she's filling out the contract for you. All you can do is send this. Another thing that's not here, and I'll tell you how I get it, is figure out if the property is or not in a homeowners association. So I would just put in here HOA. On this one, it's easy to assume that there's a homeowners association, but let's pretend I didn't know that. Okay, so what I'm going to do is I'm going to go to criteria. I'm going to enter, I like to use single family, classic single, and I'm going to do option pending, pending, pending. Just the recent, everything pending, okay? And the address, 6234. I'm going to enter the address there, and that's going to give me all of the properties that are close 0.25. So just one property so far. I can just, get away with checking this property, and I'm going to go to the listing, and I'm going to go down to see if they have a homeowners association, which they do, and it's $540. Remember, I'm doing at the end of this my seller's net, or part of my magic formula. So this is how I get the numbers, but only to get an idea, because I still need to ask the seller how much they're paying. If they're in a different section, they'll probably be paying more or less depending. So I want to make sure that this is in the same subdivision, Briar Villa, because, if it's in the same subdivision, that's when we're going to know if it's not, it's Canyon Gate. So I'm not going to rely on that. So if I can find anything under pending, then I'm going to go sold in the last 180 days. I'm going to go to results. Again, it's very close to the property, and I'm going to figure out nothing has sold in Canyon. Oof, guys, let me do 360 now and figure out if there's anything in Canyon Lakes. Oh my gosh, there are no properties sold there. Incredible. Let me expand, but by expanding, I don't think that's going to make a difference. Nothing. Okay, then I have to ask the seller. If I'm not able to find a few properties that have sold there, then I will definitely have to ask the seller, and I would just type in there. It's easy to assume that there's a homeowners association there because of the year that the property was built and the name of the subdivision. I know it already. So, but still, ask the seller and figure out how much money they pay. Everything else I have here. I can definitely do a seller's net with the information I have here. I know how much money they pay in taxes. I know that we have a homeowners association, possibly how much it's the cost, how much they're paying. It's $7,822. How much they owe, because that's going to affect that seller's net. So that's my property research. Okay, guys. So that's pretty much it on that. Hour went by very fast. So I'm gonna stop doing this right now. And now let me know if you have any questions. Does anyone have any questions? It's just right the hour. Okay, guys, so that's fairly it for the class. I hope that you were able to get some value from it. If there's anything we can help you with, if you want some of this information, please continue to follow us and continue to share your, if you have any comments that you want to give me as well, please share your knowledge with us, because we both learn. I learn from you, you learn from me, and we want this to be like that. So we are sharing with you. If you can, please, we're sharing the form with you. for the survey, if you can fill it out and let us know how we did, and if you like the class and if you got something valuable from it. So please fill it out and let us know how we did, number one. Number two, if you would like some more information about this course, because we have it, and we will definitely give you more information on it. And that's pretty much it. So please let us know how you liked it. Give us your information. We will send you the magic formula sheet, so that way you have it, and now you can do your property research using all of the resources that you already have, that you're already paying for. All you have to do is use them and be able to do your property research. Again, there's more to it. It's we have the CMA. That's a class that we're going to do live. If you would like to join us, please join us. It's going to be next week, and we're going to put the details on Facebook. But that covers a lot. It's like a 4-hour class, which is not enough, but we're going to cover a lot. And that's a competitor market analysis class. I think that's the biggest one. And then we have the one for the buyer's closing cost, the monthly payment, the seller's net, and the closing disclosure. All right, guys, thank you so much for joining us. I really hope that you were able to get some value from this class. And if you have any questions, let me know. If you need me, text me. My direct line is 832-969-6818. And if you are interested in joining a team and you think that we're that we can possibly work together, give us a call. We are hiring realtors right now, so let us know. Thank you, and thank you so much for joining us. Lina says, super bueno, Andrea. Thank you, Lina. I'm glad you were able to join us, and I hope that you got some value out of it. All right. Igualmente, hasta luego, guys. Que tengan una excelente tarde.